fundamental side is basically that you're going to have this genie that's out of the bottle named inflation. It's not going to go back to 2% or under for a long, long time. That's going to mean that the Federal Reserve is not going to be able to print us out of the future recessions that are going to come, especially this next one. And therefore, you're going to have this market and this economy that's mired in more of a stagflation period. So slightly higher inflation, but really no growth to speak of. And it's going to last for years because remember, the Fed has printed us out of every recession, probably for the last 20 years at this point, and they've pulled forward so much of the gains. If we go to the daily chart, in fact, let's go to the monthly chart. Look at the monthly chart on the SPY here, or the S&P 500. This is basically, here's 2009. This is the Fed printing of money. Does that look normal to anyone? It is ridiculous. They were pulling forward so much of the upside in this market. It's going to take us at least 10 years to digest. The only other thing that was semi like this is the QQQ going back to 2000 when we had that same vertical move. Well, guess what? It took over 10 years for the NASDAQ to break through those highs. So you're going to have this digestion period. I think what we're going to go through is much like what the Chinese market, the Shanghai and the Hang Seng has gone through, and the Brazilian stock market, which are both my favorite areas to invest right now. Let's take a look at the Hang Seng here. I want to show this because it's super, super important. So think about this, and we go to the Hang Seng here. Here you have the monthly chart. The Hang Seng currently is still trading at levels that were seen back in 2006 and close to levels seen in the 2000s. So if you look at that, the high of 2000, we basically just touched it on the Hang Seng market right here. This has been mired in a sideways chop move for the last really 10 to 20 years. The US markets, first of all, look at the vertical move that occurred here, and from 2003 to 2007, it's almost a replication of what we've seen in the US markets. And look at how long it's taken to digest that move from the Hang Seng. And if we go to the EWZ, much the same thing here. Look at that chart, 2003 and the vertical move up to 2008. And look at the digestion. I think you're going to get a breakout on the Brazilian stock market, a breakout on the Hang Seng, and the US markets will now go into that same sort of longer term consolidation pattern that we've seen in these markets for the last 10, 20 years. Just like in any bear market, in a consolidation period, there's going to be the winners and the losers. I think you want to stay away from the indexes themselves, and you need to start looking and seeing what's the new technology. What's a stock that has a good dividend, for instance, something that can pay out over time and make you money when it goes sideways. And I also think people need to be careful, but look at foreign markets. Foreign markets have been underinvested in by hedge fund managers for long periods of time. And I think that's the play to go with here. Plus gold, eventually Bitcoin, once Bitcoin's down in those lower teens, I think a little bit of the portfolio in the Bitcoin market, it makes a lot of sense. Like I always say, there's always a bull market somewhere. It's just up to us to find it. And it's just going to be a little bit harder for the next 5, 10 years